Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting briefly with Asian equities. They slid deeper into the red on Wednesday after a preliminary reading of China's mammoth manufacturing sector fell to a 6.5-year low to 47 in September. Worries over the world's second larger economy also put banking shares to lose ground, with Bank of China and Industrial and Commercial Bank of China declining more than 1% each. While of course PetroChina, which has the heaviest weighting of any Chinese company in the Shanghai index, crashed down 2.1%. The yen, however, gained slightly against the US dollar, with the greenback slipping 0.3% to 119.79 yen. European stocks opened higher on Wednesday, but quickly turned negative on renewed fears over the health of the Chinese economy, and of course continued fallout from Volkswagen about emissions scandal. The Pan-European Stock 600 index was up over 0.1% at the open, but traded 0.5% lower shortly after. London's FTSE 100 index is roughly flat, while the French CAC was off by 0.6%. The German DAX was around 0.5% lower after Deutsche Bank cut its target levels for the index itself. And also we're looking at the euro, that is still down about 1.4% for the week after recent comments from European Central Bank officials bolstered the view that ECB could expand monetary stimulus. The euro, however, briefly rose 0.2% in Asia trade to 1.1137, pulling up from low of 1.1105 set earlier on Wednesday. This was the lowest since September 4. Chancellor George Osborne said the UK's exit from loose monetary policy is going to come at an end. And of course, Bank of England Governor Mark Carney has indicated that borrowing costs are set to rise. The BOE and the US Federal Reserve are getting close to withdrawing the emergency measures put in place to counter the financial crisis. But of course, rate settlers in both countries weighing slow inflation against solid labor market data. Meanwhile, looking at the pound, it's quite steady at the moment at 1.5340 versus the dollar, recovering some ground after it fell to 1.5290 in Asian trade. Gold in the commodity sector struggled to gain some of its losses over the previous two sessions as the dollar hit its highest in nearly 3 weeks on expectations that the Federal Reserve would hike US rates this year. Gold was little changed at 1126.30 an ounce throughout the Asian session, after of course dropping 1.3% over the past 2 days. The metal slide follows a rally which we saw last week that took to a near 3-week high after the Federal Reserve stand pat on interest rates. However, the US Central Bank has also said it would move to increase rates later this year for the first time in nearly a decade. Oil in the energy sector, we're looking at the prices. They slightly dipped on Wednesday, reversing early gains as weak economic data from China weighed on commodities, and of course added to the woes of an oversupplied market that has seen prices more than halve since June 2014. Crude edged up in early Asian trade after industrial group, the American Petroleum Institute, reported that U.S. crude stockpiles fell 3.7 million barrels last week, with stocks at the Cushing, Oklahoma delivery point for U.S. crude futures alone were down almost 500,000 barrels. The actual report of the Energy Information Administration is due later today. That's all for today. Thank you very much for joining us. See you next time.